Um, Earlier on, I mentioned liquidity, and this is something to consider when you are trading any instrument, because especially when markets are so elevated and everyone's long everything at the moment. The short sellers have been squeezed until the pips squeak, and well, I think if you probably picked up on the news feeds, AMC, I think trading in AMC has been suspended, and we've talked about looking at stocks that are heavily shorted for a short squeeze. It seems that the is it the Wall Street Bets crowd, this cohort of activist traders, and more power to them, I say, taking on the hedge funds. Although, having said that, in AMC, it's hedge funds and against hedge funds have been sort of slugging it out on AMC as well. So what I'm trying to say is, when we are in the kind of market condition that we are at the moment, if you are going to be looking to take positions, I think we really need to look to go into markets instruments where there is a lot of liquidity. And this gets back to stock selection. What do you, let's say you don't have a watch list. So what do we, what what parameters can we use? And this is a parameter that I was talking about it with someone. I was having a conversation, and I said, well, what do you think? And in the process of the conversation, and this is where FinViz comes in. And what we looked at was obviously the volume, the sheer amount of volume that's traded. And I've actually gone for over 1 million, and it's quite high. I think when the markets are much more balanced, as it were, you could probably reduce that to something like 500,000, David. We used to do 500,000, didn't we used to do? Yeah, I think when we were back in the day, we would look at something over 500,000. If I reduced that to 500,000, you would have a ton more selection. But the reason I've gone for 1 million and over is simply because of this issue of the liquidity. I've also put a relative volume factor in, and that is shares that are trading over the relative volume is trading at a higher rate. As the ratio is much higher than you would normally expect. You can change that. You can have any. You can set the figure. Some day trading, educators actually suggest a much higher percentage. They really want a stock that's really kind of turning over. And then the price itself, and I've actually gone for over, well, I think I can go over, you can go over $7, $5. As I said, you can play around with these numbers, and of course you'll get different you'll get different selection of stocks. So for example, if I move that to any, you can see immediately what's happened there. Yeah, I've got 70 odd pages of this. So I've got my, hold on, let me just disable that for a second. Yeah, that's it. Yeah, it's just I've got my ad blocker came up. So let's go back to what did I have it at? 1.5. Yeah, that's it. Right. And you can see immediately, this is every sector, by the way, but then you can refine that even more. You can look at, we looked at previously sectors that are moving, doing well, not doing well, but let's ignore that for the time being. I've put any sector in. And you can see immediately, these are the stocks that are coming up. And I think it's quite ironic actually with AMC. AMC is more volatile than crypto. Bitcoin is actually very, it's got very quiet. We talked about Bitcoin this morning in our Forex session. And when we look at them, and we've got time, I'll have a look at the daily chart because it's really interesting in as much that it's also trading within a very big volatility candle. And there are very, key levels in Bitcoin that have to be, taken out before we know the direction. There's also, it's kind of forming a little pennant within that candle as well. And whatever you think about Bitcoin, As I said this morning, I think I have to put a suit of armor on before I say anything, whether it's perceived as a currency, an asset, a speculative asset, you know, we're setting that aside. It's really, really interesting, but from what I've read and from talking to other traders, you know, the view is that it is behaving more as an asset rather than a currency. Whether it ever becomes a currency in the way that currencies are, you know, we understand currencies to be, who knows? We'll wait and see how that plays out. But from a chart perspective, it's very, very interesting. So we have this down here, and you can just go, it's, you know, down to 4 pages. It just makes life an awful lot easier. So once you've had a look, let's go back to page 1 a second, because there's another little thing I want to say. Now, the nice thing about this is, the reason I really like FinViz, we talked about looking at charts and chart shapes. And I mentioned, I don't know, did I mention C states earlier on? One of the ways that David and I have come to try and explain what we mean by not so much the mood of the market, but what state the chart is in. In other words, is it in a nice steady trend? Is it in quite a boring congestion? Or is it in a very volatile case? Is it very choppy? And the analogy we have used, we call it C states, because it really, really works very well with the analogy of sailing. You don't have to be a sailor. You don't have to have got into a little sailing boat to understand that when you want to get into a sailing boat because you want to get from A to B, the first thing you look at is, what kind of weather am I facing? If you are thinking of getting into a sailing boat or a rowing boat and it's blowing a force 9 gale, you know you are going to be taking on more risk. And if you apply that analogy to a chart and you recognize that the chart is in that C state, it's very, very volatile, the risk of taking a trade in that environment is going to be higher. You may get a higher reward for it, you may, but equally you may be completely wiped out. There is another C state, which is what we call the doldrums. The doldrums are basically where there's no wind and you're just sort of, you know, aimlessly chugging along and hoping to catch a bit of a breeze so you can get moving. That happens, you know, sometimes in a congestion. A congestion just is no direction, it's not going anywhere, it's waiting. You know, you've got to wait for that wind to, you know, to get into the sails, and away you go. And of course you get, you know, nice even weather, you know, just a lovely sunny day, the light wind to carry you from A to B. Now, each of those states has a different risk profile, and it was the easiest way to try and explain, you know, what to look for in a chart. Now, this is just a plain chart that is pulled up by FinViz, and it's why we developed the volatility indicator as well. And you can see that when because when that is triggered, you know that, you know, it's very, very choppy waters, and it's very, you know, the risk of any trade that you're going to take is going to be higher, because risk in trading and investing, the financial risk it's not easy, but you know how much of your trading capital you want to lay on the line. What's much more difficult to try and establish is how risky is that risk? Well, if you understand the C states, what you then do, you could say, actually, I am going to go out. I know it's a force 9 gale. I know, you know, I'm going to get a bit battered out there, but you know what? I'm not going to use all of my, you know, the money that I would normally put into a more calmer market environment. The way you look at it, and this is why we were able to look through charts really, really quickly. So Airbnb is actually a really nice example. I mean, it's just, you know, it's insane. I mean, okay, forget the price for the time being, but the first thing you see about the chart is, I'm not going to point it because it will move away, but so if you just focus on it at the moment, you can see it's obviously had a bit of a, you know, it's come down. I mean, obviously anything to do with leisure has taken a real battering because of the pandemic. So it's had a big sell-off, but look at the actually, I will pull it up because it's such a good example of what David was saying. Right. We had this fall lower, and very much like a cog, you then go into a, you know, consolidation, a congestion phase here, where you're obviously having, you know, a degree of accumulation because you can see the volume underneath it, and now it's kind of, you know, it's kind of gently moving higher. This would have been quite fast. Waterfalls are always fast. You've got a gap down. Markets always fall a lot faster than they rise. And you think, okay, you're going to wait for that. Then they calm, the energy goes out, the wind calms down, you get the accumulation, and now it looks, you know, all being well with regard to the leisure industry, the virus calms down, you know, and maybe that's got a chance of going higher. If we move back and we look at this period here, and you say, well, if you don't have the volatility indicator, how do you know you're looking at a volatile C state? It's quite, you look at the wicks. If you've got candles with big wicks to the top and the bottom, you know, that is not a nice smooth ride, either higher or lower. So that's how you can learn to identify it. So going back to this here, so you just literally go, that's all you do, you eyeball it. Who's this one? AI. Well, that looks an interesting chart. You know, you can see the volume down at the bottom right hand side. It's been, you know, moving up nicely, looks nice and steady. And goodness gracious, what's that? 6 million, whatever it is. It's $75. But you're looking at this shape of the chart. You can get a feel for whether it's choppy. You have a lot of gaps. You have a lot of spikes. You know, big wicks. You know. Whipsaw price action, you will see that, and that will tell you, you know, what you're likely to face in terms of a trading environment. Now, AMC, here we are. This is the one that's, as I said, has I think it's been suspended because it where all the battles are going up at the moment. That is, you know, this is another GameStop a stock, in the sense that it was, I believe it was very heavily shorted, and there's nothing wrong with having that approach. We've touched on it on previous webinars. I gave some resources where you can go and find the most heavily shorted stocks, and clearly, you know, the activist traders all got together, they've all done their research and said, haha, you know, let's all pile into this one, and good luck to them. You know, this game that we're in at the moment. There are no real rules in terms of, you know, what you should do and what you shouldn't do. What you mustn't do is try and say, well, are they manipulating the price? No, you know, hedge funds have made their decision. They were going to short this company for whatever reason, and you know, they've been taken on at their own game, and good luck to them. And you can look at, I mean, look at that volume. I mean, it's insane. It's absolutely insane. And you know, given what's going on, and if you certainly look at that in the faster time frames, you will have, you know, candles, you have volatility candles being fired off right, left and center. That is a force 9 gale. But you know, if that's your thing, if you're a storm chaser and you like the, you know, it energizes you, then fine. But be aware that it's going to be very risky. You know, be very careful of how much you're going to put on, but that is a decision. But at least you understand what you are facing. You're not going in blind, and you just literally, let's have a look at that one. That's pretty horrible. Another one is BlackBerry. There are certain stocks at the moment which have attracted this attention, and you can simply tell from the volume that you can see over the side. This is 199 million. I mean, insane amounts of volume. And the other one is Bed Bath and Beyond, although I don't think that's 85 million. That too. You know, why? It was you know, the housing market's coming back. Who knows? We're not really interested in the reason. We just want to look through these charts and think, oh my goodness, is there anything? Well, that looks interesting. What's that one? That's a real estate. That's only 1.1. It's going up. The volume is it's had a really nice run up since April. Could that be a a bit of a short there? You just go through that. And the one I've actually looking at myself, I want to show you in a second, is actually Carnival. Carnival's really interesting at the moment for other reasons as well. So that's FinViz, absolutely wonderful. As I said, you can go back even further, and you can say, well, I actually only want the financial ones. You can play around with it. It's great, it's fantastic, and it's free. I would actually suggest you register. The free one is actually littered. Sorry, there's one version where you don't give your name and email. It's actually littered with ads and pop-ups. But if you're happy to give them your email address, you get this one, which is nice and clean. Now, this doesn't stop there. I think this is absolutely brilliant. I can't tell you how excited I got when I saw this. You've all seen heat maps before. And I think we've looked at this with FinViz, and you can have a look. But how boring is that? They've come up with something called bubbles. This is wonderful. My grandchildren absolutely adore bubbles, and I think I can understand why. I haven't played too much. I haven't played around very much with the filters. But what's really cool about this is it's the presentation of it, and again, you get the same pop-up with the charts. And the one I actually saw actually did come up. I bet I can't find it now. I thought, oh, that's interesting. Because you know what you're looking at in terms of a chart and chart shapes, and you'll be able to recognize it. It's just such a quick way. Can you imagine having to type this in? Endlessly type it in, and it was actually UHN, was United Healthcare, I think, and it was absolutely brilliant. I thought, oh, that's a really nice chart. That looks really, really good. Now that is a fantastic chart in the sense. Now, what are we seeing there? We are seeing we're seeing congestion phase. It's had a nice run up, had a bit of a pullback as we saw. Whoops, I've lost it now. Oh dear, that's the bad. No, it's gone. That's the downside of this, of course, being able to say what I was going to say on the previous chart. It had actually pulled back, went higher, and now it's in a huge congestion. I might pull it up on, no, that's United Airlines. There we are. Let's have a look. No, I can't see it. Anyway, play around with it because it's great. It really is, and I can't recommend it more thoroughly. That's that. Once you've chosen your stock, what we always do is we pop over to MarketBeat, and we do because it's a great site for catching up on the background to the stock. And where's the chart on this one? Let's have a look on earnings. Ashford chart. Here we are. Now AHT. Those of you who've come along regularly will know that in previous webinars, we were looking at this as a long, and in fact, this one I looked at it based on what the options market was. There were some headlines about the option markets back in the beginning of April. And in fact, I picked up the headlines at FinViz, because with FinViz, what you can do is you can then put the ticker in here. Oh, here it is, sorry. You can put AHT in. Let's have a look. That's right, and it brings up the stock itself, and then under here you've got all the headlines, and the headline that actually caught my eye was this one. April the 7th, are option traders betting on a big move in hospitality? Then I went over to here, which is MarketBeat, and I looked at the options chain. And it was the strike price that caught my eye was actually the $5. It's gone beyond the $5, so that call is now pretty much in the money. And you look at the open interest, you look at the volume. Now the next strike price where it's on the upside is 750. So the option market is very positive on this particular stock. Don't look at the fundamentals too much, but it's another one of those that's sort of betting on the reopening of the leisure industry, which brings me to Carnival. Carnival was one that I looked at, that I picked off the FinViz. Let me just go back to FinViz here. I wish I could find that. I disappeared. Did you see that stock? It was really, it was super, absolutely super. Oh, this was the one I saw before, United Health Group. As you can see, it's had a really good run up. Then it's had looks like a reversal, but it's gone into a sort of long, it's sort of quite a calm congestion phase. And I'm not sure, maybe it's going to break down, but it looks a bit weak. We'd have to put it on our own charting, you know, with our own indicators, because I want to see where the volume point of control is and what have you. But it's a great way to filter, where you start to filter, you know, what is going on, just, you know, looking at the chart generally. Right, let me just go back here and put CUK in. Hold on. Carnival, there we are. Carnival. All right, Carnival, here we are. Let's have a look quickly. I've got the relative volume 1.48, average volume 1.6, which is what we want. Let's have a look. Sometimes I have a look at the RSI. You can see the fundamental metrics are terrible. Rate of return on assets, on earnings, on investment, dreadful. You know, you think, but they have had a really, really bad time. You know, the cruise industry has been decimated. Now, hopefully, that's what they are, you know, hoping that they that, you know, it will come back. And as I said, you have a look at the headlines. Sometimes you've got to be a bit careful about headlines, but it's just interesting because you get a really nice background into what is going on. Then you go back into Market Beat. You've got the chart here. Chart looks nice. There we are. It's had this sort of, you know, this is what we call this congestion phase. Quite a lot of gaps in it. At this time, you would, you know, you'd have a support, you know, a resistance line there. You'd have the support there. You know, you would, in my opinion, you would look and wait for this breakout. Now, the most interesting part is this here, because you have a lot of volume going in to the buying here, and now you're looking at a sort of, it's not a really, you know, it's a nice trend. That's all you can say about it. And you know, where it's going to go, how far it's going to get. Well, you know, that's why we developed our indicators, to help us with all those decisions. And we look at the volume. Is the volume consistent with the you know, with the candles that are being formed? Again, I would look at the options chain, because, you know, when it's in a nice trend in this way, let's see what the option market is thinking. Is it thinking anything at all? Let's have a look. We've got $25. Not a huge amount of interest from the options market at the moment. It's got $30. Where is it? $25. What is it at the moment? Let's have a look. Chart. Where are we? Is it at 25? It's actually gone beyond 25, so it's at 26. I also have a look at the short interest. I know it's not completely up to date. The short percentage float is 2%. It's gone up a little bit, so possibly one to be aware of. So this is what you would look at. And in fact, what I've done, if I actually put it on, here we are. Right, this is the weekly chart. This is obviously last year when I said all the, you know, anything to do with travel, holidays, just absolutely fell out of bed, as we can see here, and it's had this very, very long congestion phase. And this is the secondary congestion phase where we're looking at potentially this breakout. This is on the weekly chart. Let's have a look at the daily. Let's have a look at the daily is telling us for some levels. Where are we? All right, here we are. All right, we're up at the top of the volume resistance. We've gone up to 27. Had a really nice move higher today already. And this is the kind of the trend that we are looking at. Let's move right down to the 5-minute chart. See what that's showing. Yeah, this is what we've had today. That's quite interesting actually, because we've had it actually came off $27. This is the open, the usual nonsense that we get at the open. But because we had seen it on the daily chart that it was, looking to move higher, the bias was to the long side. And you can see that what you look at when you're in this trend like this, you look at the volume down here, you look at the volume underneath the up candles. More importantly, you look at the volume underneath the down candles and you think, well, okay, that was just a little pullback. It went higher, a little bit of congestion. We've had some volatility come in. We've had volatility with the down candle, immediately reversed into the spread. That had a reversal. So we had like a two-bar reversal, but two volatile on both, and then we had this final run up, as it were. But the volume underneath the up candle, so you kind of know that's coming down as well. You've got 3 candles here, you've got rising volume, but the spread of that candle, the volume under that should have been more. Although you've got rising volume, the spread is a little bit, the range is anomalous, as it were. And it's also, this is when support and resistance comes in. You're back at the support of this previous congestion phase. So, and given that is overall bullish, as it were, this is the high of today. You've got it came back again, gotten back to the second level, which is the low of this volatility candle here. As I said, it's still looking sort of bullish. And, if it's going to go, where is it going to go today? Well, it's certainly at 27. But for a section of price action on a daily, let's just say on a daily basis, what's wrong with that bit there? Is even that bit, that's very, very clear. Everything sits, everything fits. Nice volume on the up candles, down candles, fine. And you get into a congestion and you think, and sometimes when the volatility is triggered, that is as good a reason as any to actually exit from this particular trade. That's if you're, on the 5-minute chart and that's all you're interested in. If you're looking at this for a slightly longer hold, then there's nothing to suggest that it's going to roll over sort of dramatically. And it's not I know we've got volatility here, but this is a nice steady trend. We had a bit of a squall here, but it's really nothing to write home about. I have to say, whenever Dave and I talk about stocks or anything, they are not recommendations for you to go and buy. I have to really, really stress that. We're allowed to use NinjaTrader, and they are constantly monitoring what we say in our videos, what we write on the site. This is not investment or trading advice. This is simply, explaining to you, sharing with you what we see on the chart. Just to go back to Carnival, the nice thing, as I said, you can have a look at. There we are. This is the headline. Airlines, cruise shares, they surge for demand as the economy reopens, and we get back to a degree of normality. You can go down here. You can find out. The key thing with this one now is obviously any earnings that are coming up, but I think we're we're away from that. And what an interesting headline here. See strong trading volume, the word volume. Someone left a comment on one of my YouTube videos saying everybody's talking about volume price analysis. I have to say, David and I came up with volume price analysis as a way of describing, because until we came up with the expression, I don't know, 5, 6, 7, 8 years ago, no one was using it. Never mind. Which is fantastic. The fact is that volume is now being mentioned by all and sundry. Brilliant.
Absolutely. Thanks, darling. Back with me. Hopefully you can see my screen. Hopefully you can. I'm just turning around. Can you see my screen?
Do you mind just probably 1 second and I'll come straight back to you?
Okay, can I just stay on my screen, or do you need to change screens?
I just say 1 second.
Okay, hold on a minute. Sorry. I'm just running down the questions. Have we looked at battery technology? Interesting question. Hold on.
Sorry, apologies. Just to recap on the YM, when I said that with the Renko, it's nice to look at the time chart, and in fact, the perfect signal actually came up for a move out of this move lower. It never got to today's low, as we can see here on the volume support, but we have a lovely 2-bar reversal. 2-bar reversals are just brilliant. They really are. They work really well at the top of a trend, and price will fall a lot very fast. You've got to kind of, if you overlay that candle over there, you've got weakness. Obviously, you've got an up candle, and then that's a bearish engulfing candle, which if you put together is like a shooting star. But 2-bar reversals, they work really, really well. I think they work even better at the top, but they work equally well. And this is where the exit is. The Renko hasn't quite transitioned, as it were. It's still saying, yeah, okay, probably going, have a look at when it gets to the R1, maybe it's going to have a pause. But after that little rundown, I'm happy. Come out on that candle pattern, then it's fine. You go in again. There's always the market's always there.
Back with me. Thanks, darling. Yes, I know we've run way over time. Sorry about that. Unfortunately not, no. Finviz is very much US based, and I have to say that from a personal perspective, not from an investment perspective, but from a trading perspective, the US market is it gives you more opportunities, particularly if you're an options trader. We were heavy options traders. And the nice thing with US stocks is you're only required to hold 100 of the underlying if you're trading things like covered call options, which we were at the time. Whereas in the UK it's 1,000, so it's much more intensive in terms of investment required. And you've got a much bigger basket to play with. It's quite limited in the UK in that sense. So the US markets, and obviously you've got Canadian markets and all sorts of other markets as well. There's far more opportunities for all sorts of stocks, and particularly, as I say, with regard to options, if you're having to hold the underlying, if you're trading anything that's covered. I just wanted to highlight this. This is a workspace that we use a lot. It's multiple Renkos. It's a very, very powerful way to trade because you're using all the aspects of the indicators in terms of time and volume price analysis below. So I've got a 15-second time frame, a 30-second, and a 1 minute. And then above that, I've got the equivalent set to that particular time horizon. So I've got this one set to 15 second. I'll just refresh that. Click it on 15 second. What is it delivering? It delivers the optimal brick size for the market right now at, where are we, 20 odd past 7 here in the UK in the evening. Just click on that, and that pulls up the optimal brick size that I should be trading at this particular precise moment in the market. And this particular instrument will be different for every single instrument, and obviously different throughout the day. Just click on that. That's telling me that's 17, and this is on the 1 minute. So we'll just click on the 1 minute, pull that up. That's going to each as you go down the slower time frames, then the brick size increases. And basically, all these numbers mean they will relate to the market you're trading. This is the NQ, the smallest tradable element of the NQ is the tick. There's 4 ticks, so if you just simply divide the 11 by 4, so basically we've got 3 3/4 index points here, if you like. This is 17, so you divide that, so it's 4 1/4 on there, and over on here we've got 23, so this is just under 6, so it's 5 3/4 points each of these bricks. And if you equate that to the dollar value, this is a sizable amount. But what's nice about it is obviously below you've got the VPA analysis to help you with everything, to look at your VPA, to look at the, you've got support and resistance up and down here, you've got the accumulation distribution on here, you've got the volume profile, you've got the VPOT, you've got the trend monitor helping to keep you in. We've rallied here, volume falling away. What do we expect to see? Congestion. Why? Because the volume's falling. We've got a rising market and falling volume. That is not a sign of strength, it's a sign of weakness. It not automatically mean that the market is going to roll. It just means that the buying has, for the time being, run out of interest, if you will. And again, coming back to what I was saying earlier on, here we are, we've moved into a strong congestion phase. We've got this terrific channel which builds on the top and the bottom. It's literally like a tube. You get the upper level of resistance, the lower levels of support and the accumulation distribution, and out we come the other side. Have we got decent volume with it? Yeah, it's not bad, breaking away. Obviously, it's distorted by this big candle here with this ton of volume. So if I pull that out of the way, there you get a more demonstrable effect, if you will, on the breakaway. But once again, the price was rising, but volume was actually falling. It was weakening. Does it mean it's falling away completely? Is it going to reverse? Not necessarily. It just means it's running out of strength. So you're going into a congestion phase again. Just pull that back. It's a bit too hard on the eye, that one. So you have all of that below, and obviously you've got it in the different time frames, 30-second over onto a minute. And as Anna said, in terms of volatility triggers, if you get a volatility trigger, it's a time to exit. Well, it certainly is if you're on the short side here. But then equally, the flip side of that is it's a time to get in because you're looking to go to the opposite direction. That is the beauty of the volatility trigger. As I said many times before, if you've got profit and you've got a position in the market and you hit a volatility, get out. Or if you're trading multiple lots, take most of it off the table, bank it, and just let one run. If you've got 3 or 4, take 2 out and let one run, or 3 out and let one run, because you don't want to sit through congestion, and you certainly don't want to sit through a reversal. Why would you? So if you get, and to be honest, if this had not reversed as it has done here, and if it just carried on lower, what have you lost? You might have lost a few points in here. Well, so what? You've jumped back in, you've saved yourself a ton of aggro in here, and you've really not lost anything at all, to be honest. It's just a very powerful way to trade. You can use it in here on a NinjaTrader. You can do it in exactly the same way on TradeStation. Just pull this over finally, so we wrap up. We've gone way over time. Where are we with the yen? Just bang that up full size. There we go. That's what's happened with the yen. Spiked up. That was the fall we've seen. Now it's starting to come off a little bit. These two moving averages are automatically on here, so you get that as part of the indicator as well. It's all, sorry? Yeah, well, yes, absolutely. They're on the indicators. Moving averages get a really bad press, and they're a fantastic indicator. The one thing you have to understand is price action, because if you understand the C states, and that's what it comes down to, because traders use them when they don't understand the C states, and they can't, they can't figure it out because it goes into congestion, and moving average in congestion is useless. Once a trend starts to develop, and provided it's supported with volume, then what happens with a moving average is if it sits below in an uptrend or above in a downtrend, you will find the price action bouncing off it all the time. It's a great support mechanism, and it's a tremendous indicator, but it's used in the right way and in the right C state conditions. That's all it comes down to. Really nice little rally going on here. Trend monitor's blue, trend dots have transitioned, gone to the underside of the candles, moving up through the accumulation distribution price action. Same here, just starting to see that rally take effect over here. Bear in mind we're trading around the VPOC here on the 1 minute, so just got to be a bit cautious. Plus we're in another channel here. Look at the price action here. We've got to break through where 35, so we're hitting 35, 35, 35. If we get through there, look at the volume, it falls away dramatically. That's going to spike, go through 40, 45 pretty easily. There's very little in terms of price-based resistance there. So we should be going all the way back up to 50 or 55 or even 60, with a bit like, so you'd be looking at that and thinking, okay, is this a trade I want to take? First of all, you've got to decide where you're going to jump in. Are you going to wait till you hit 38 or 40 or 42? Where are you going to jump in? What is your pain threshold? You don't want to jump in too early, so you've got to wait for a candle to close, get away from this region, and then decide where you're going to move in. But you're constantly looking at the chart in that way. Let me just wrap up very quickly. Sorry, gone way over time. You can find all the indicators over at quantumtrading.com. MT45, NinjaTrader 7.8, TradingView, and also TradeStation. The version of TradeStation which I've had up is TradeStation Global. That's running on 9.5 and it's driven by Interactive. If you have an IB account, you can have this relationship, just link it through, and you've got that. You've got all the benefits of trading on a TradeStation with radar screen. It's just such a powerful application, and you can also trade off the screen because obviously you're dealing with an IB, with the IB account and all the benefits that that offers. Remember that whatever you invest in with us, if you buy 1 or 2 indicators, if you buy the full package on any of these platforms, then you get all future indicators free of charge. We've always worked that way from day one and will always do so for the future. It's just our way of saying thank you for investing in a full package. So you always get future indicators free of charge that we develop. If you buy one or two indicators, terrific. In the future, if you decide to upgrade, maybe you want to upgrade to a full package or you want to move to the education program, you always get a full credit. So you never ever lose out. We just give you a credit for whatever you've purchased in the past. This is where you'll find Anna, annacooling.com, all the analysis, all the posts up and down here, the books. You can buy all the books on Amazon. They're in Kindle version. They're also all in paperback around the world. Not every destination, I appreciate, but pretty much everywhere. So that's where you'll find Anna. And finally, the Forex Education Program. I know we've got some of our students here, so good to see you. It's called the Complete Forex Trading Program because that's precisely what it is. It is a heavyweight program which covers everything you need to know to trade Forex with confidence. And since we launched it 2.5 years ago, nearly 3 years ago now, we've also bolted alongside the Funded Forex Program, which gives our students the opportunity to put that knowledge into practice and actually earn at no risk, because you're trading our money all the way from $5,000 all the way up to $2 million. And in addition to that, you earn as you're going along. So as you make profits, we pay that back to you, 35% at the evaluation stage, 50% above that is remitted back to you on a monthly basis. And at the higher levels, certainly once you get through the evaluation stage, which is purely Forex only, once you get onto the portfolio managers levels, then you can trade other markets. So you can trade gold and you can also trade the indices as well as all the currencies. So it really does broaden out thereafter. That's it. I think we're done. Thank you very much indeed for coming along today. Hope you've enjoyed it, and enjoy the rest of the trading session. Enjoy the rest of the trading week. We will be back next week for more of the same. So stay safe as always. Hope you're keeping well, and thanks for coming along today. We do appreciate it, and bye for now.